Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the macro bullish scenario where we are looking at a finished wave 1 and a finished wave 2 for now continuation to the upside in a wave 3. Now you can see that the low of wave 2 has been made above the 0.5 Fibonacci, taken from the low to the all-time high, and that is not something you see very often, as the most common target for a wave 2 retracement is between the 0.5 and the 0.786, but as you can see the 0.5 hasn't been hit. However, there is sometimes a discussion where this wave 1 moves to the right and this wave 2 moves to the right as well, when then you have a 1, 2, 3, 4, 5 over here. And if we then change this Fibonacci from the COVID low to the all-time high, you can see that the 0.5 has been hit. So that is something we have to keep in mind. And actually the same applies for the Fib time that you see on the chart, the two vertical lines. Currently the Fib time is taken from the low over here to the all-time high to compare the time it took to develop wave 1 with the time it took to develop wave 2. And you can see that this wave 2 then ends before the 0.382, which is also something that is quite rare. Usually corrective structures are ending behind the 382, at least that is most common. But then again, if we move the wave 1 to the right and the wave 2 to the right as well and change the pivot of this Fibonacci time to the COVID low, then you can see that the low of wave 2 has been made right on top of the 0.618. So this is again something we have to keep in mind. The only problem I have with this making a wave 1 and this a wave 2 for then eventually a bigger wave 3 is this structure over here. Because if we think about corrective structures, this looks very much like an impulse to the upside. And if this is part of a correction and not a wave A or a wave 1, it has to be a wave C, meaning it then has to be an expanding flat in an A, B, and then a wave C. But this wave B is reaching far beyond even the rare targets for a wave B. If you take a fib from a low to a high over here, and also an expanding flat is a 3-3-5 wave move, but you need a solid 3-wave structure, which is difficult to count as price was going lower and lower. And again, if this is a wave B to the downside, it has to be a 3-wave structure first of all, but this wave B is very, very deep. It goes below the rare targets of a wave B in an expanding flat. So that's why currently I have this wave 1 over here. Now what you also see are the two purple lines. These are bars patterns. It's a copy from previous price action where this structure that you see over here has been taken from this piece of the chart, and the one on the right has been taken from this wave 1. Now if we first compare this structure with what we see currently, we can compare the impulsivity, right? Because if this is the beginning of a wave 3 to the upside, well, a wave 3 in a bull market as well as a bear market is the biggest, longest, usually the highest volume wave in an impulsive structure, right? This is the one where you really want to see a parabolic move. But at the moment, it looks like, yes, we are going to the upside. Of course, we doubled price from 15K to 30K. That's all nice, all good. But let's compare it with impulses from the past. First impulse, put it on top of the low over here. So this structure, comparing with the current price action, you can see that this move to the upside was a lot sharper, a lot faster towards the upside, higher prices a lot quicker, right? And if we then compare this impulsive structure of this wave 1, and we put it on top of the current price action, there's a bit more overlap. It had a bit of a slower start, as you can see, but then it started pushing. Slow at the beginning, but then it started pushing towards the upside. And at the moment, we are stuck around the 30K area for quite a long period of time. And that is the main thing about this wave 3. If it is the biggest, strongest wave, we really want price to see it pick up, right? We need that big move to the upside, and we need volume increasing. The longer this is taking, the longer we have sideways price action or like a ranging structure to the upside instead of impulsive moves that we see over here, the lower the probabilities for a bullish scenario. If you go to the macro bearish scenario, then in this scenario we again have a 5-wave structure ending at the all-time high, but now we're looking for a 3-wave structure to the downside, a correction in either an ABC or a WXY. It doesn't really matter for the targets on the chart. In this scenario, we are at least looking for inside this wave B for a 3-wave structure in a zigzag, being an A, B, C, where wave B could already be in over here, hitting the 382 Fibonacci, taken from the low to the high. So that could be a potential low of B for then a move to the upside in a wave C. Of course, if price moves to the downside, absolutely possible. We can move this B to the right side, but more about that on the high time frame scenarios coming up. But then we would be looking for a C towards the upside. And the most interesting resistance area for Bitcoin here is between the golden pocket and the 786. Now the golden pocket over here is in confluence with the point of control of this volume profile range, which is a very important level at around 39 to 40k, and the 786 is in confluence with the value area high of this volume profile. So this is massive resistance over here. Also, the target for a wave C, as it stands right now, taken from the low to the high of A to the low of wave B, is between the 1 and the 1.236, and you can see that the 1-to-1 over here is lining up perfectly with the 786 area around 50k. So between 39k and 50k there is massive resistance for Bitcoin. At the moment though, it is still ranging in this bigger support resistance area, as you can see. Now if we then look towards the downside for then an impulsive move to the downside in a wave C, a very important support area for Bitcoin is between 11k and 8k. So over here the golden pocket is taken from the low at 3k to the all-time high, but also we have the volume profile of a multi-year range, while the value area high over here is going right through the middle of the golden pocket. And if price would go to the 1-to-1 over here, and we then take a trend-based fib extension from the all-time high to the low to then the high over here around the 786, then the most common target for both a wave Y or a wave C between the 1 and the 1.236 is in confluence with this support area over here. So this is massive support for Bitcoin as well, for then eventually a bigger push towards the upside. If you then go to the daily time frame, to the high time frame and not the macro scenarios, then over here we are looking for the bullish scenario to the upside. In this scenario, wave 2 or B is already in after wave 1 or A is also finished, and we are looking for a move towards the upside, and then either a 1, 2, 3 where we want to see a bigger impulsive move to the upside, or wave A, 5-wave structure, 3-wave in B, and then we want to see another 5-wave move towards the upside. The biggest difference between a wave C and a wave 3 is the impulsivity, where in a wave 3 you really want to see again an impulsive structure to the upside, high volume, parabolic move, right, very quickly moving towards the upside, while for a wave C, well, wave C tends to be a little bit more like slow, and also a wave C, most commonly at least, is a little bit longer in time compared to wave A, and that is why we have the purple line on the chart. The vertical line over here is a fib time taken from the low to the high over here to compare the length in time with wave A to the length in time of a potential wave C. So if price is going to approach the 40k area around the fib time, which is currently sitting around November this year, then we have to think about a potential wave C. And we also know that the 40k area to 44k area is very important resistance for price, which is also the main target over here for a wave C. If price, however, would move sharp towards the upside far before we're going to reach this area, the probabilities of this being a wave 3 might be on, where then a wave 3, usually the minimum target is, yeah, there we go, 50k indeed, 49,974 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, which again is an important level on the macro. So you can see how the macro time frame and high time frame are in confluence with one another. Something I do like to say though is that this low over here that you can see has been made on the 382 fib taken from the low to the high of wave A or wave 1. And the 382 is a rare target for a wave 2 and a common target for a wave B, meaning that if we are going to move towards the upside, the probabilities are automatically a little bit higher for this to be a wave C instead of a wave 2. What is nice at least is that this low has been made after the 382 fib time taken from the low to the high, and that is also what we like to see both in a wave B as well as a wave 2. If we go to the other scenario, well, in this scenario, we're then going to find one more low to the downside before then seeing a push towards the upside. So both of the scenarios are looking towards the upside, but in this scenario, we are then looking for another move down, where then preferably price is going to end somewhere in this green box, white box over here, right? These fibs, again, taken from the low to the high of 1 or wave A. And this is also a common target area for a wave 2, the 0.5 to the 0.786, but I left that one out for now. Let's first focus on this because price is not even close to these levels over here. But then the 382 is not going to be the Fibonacci for an eventual high. We're going to move to the downside and to this area, which is between 23.3K and 20.8K for then eventually a bounce towards the upside, keeping in mind that the 786 is still a target for a wave 2 or B, which is also below this low, but that is actually quite low at the moment. Now, of course, this depends on the medium time frame counts that we have and that I always share in my regular updates as well, my updates throughout the day. At the moment on the medium time frame, it's a little bit more likely at the moment that price finds continuation. So therefore, if we look at the probabilities and I actually zoom out to the probabilities, then currently on the high time frame, which is the daily time frame where we are at the moment, the higher probability from an Elliott Wave point of view scenario, so the higher probability scenario at the moment is that we find some continuation to the upside and the low of B over here might be in already. This is of course probabilities based on Elliott waves. It's not necessarily preferred or alternative, but this is currently the highest probability based on the price action that we have locally, funny enough. So it's not really based on what we see like in this move up or this move down. It's really what we see based on the local price action. If we then zoom out to the macro scenarios, well, as you've probably noticed, both of the macro scenarios are looking for price to move towards the upside because the 40 to 50K region is very, very important. In the bullish scenario, we are eventually looking for a move towards the upside, where of course we want to pass 40 to 50K, but also in the bearish scenario, preferably price is going to reach those levels around 39 to 50K. Very important resistance for then eventually a move to the downside, especially if price can enter this volume area over here, because if we pull a horizontal line of this value area low, then you can see that on the macro, we are basically backtesting the value area low. And that is important because if price can find respect or find a backtest on top of the value area low and then move towards the upside, the next level of interest is going to be that point of control at 39K. And if we pass that, it's going to be the value area high at 48K, right around the 58 or the 50K 786, a high here as well, and the one-to-one target. So make sure to keep an eye on this. The volume profile that you see over here is pulled from the 4th of January 2021 to the, let's have a look, 30th of May 2022. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.